Good ECB morning, everybody. How's everyone doing today? I want to welcome our viewers from investing.com. Mario Draghi, ECB has spoken. What a candle in euro. So yesterday, actually, I turned constructive on the dollar, but flattened out, scalped this off the divergence. Looks like we may make another trip down here. I don't know. Also, we have the NFP tomorrow. So, a very volatile environment and prudence over valor. If I miss something with this kind of news happening here, it's okay. You know why it's okay, everyone? There's always another trade. Okay, so I've had a decent week going into these numbers and events, red events, not pink, but red, major market movers. So we saw that on the candle and the dollar and the euro. So I'm going to withhold judgment for now about what's going to happen here, because it could fade and we could get a 3 drive, and I wasn't buying it here. So what do I do? And people say, what to do about the euro? I mean, with its candle, you have to think we're going to make another high, right? But it's ECB press conference coming up. I don't know if Draghi is happy about this reaction. So we'll see. Things are slowing in Europe too. And I know the euro is only 113, but if we start to continue to the upside, we're going to break that wedge. So I have a little different wedge line than the guys here, but it wasn't great. Use your imagination with the wedge line. So let's leave it there. Okay, so taking out yesterday's high would seal it. It looks like closes over 113. You have nothing till 113.50, and if this is a major shift in the dollar, and I recommend you go to our blog, Blake, Stell, Steve wrote something about the potential of a dollar breakdown, just to alert the trading community. It's free. What to be aware of, because you've had dollar bulls for a long time, so there are a lot of people wrong-footed if we get this breakout here. Everyone with me and understand what I'm talking about? Give me a Y. We have a great interview today, guys. CNBC contributor Peter Bookvar coined the phrase, and we'll be talking about the Fed. He coined the phrase that the Fed is not data sensitive, they're S&P sensitive. So I'm going to get Peter's view on all the market chatter about perhaps an easing at the next meeting. Of course, a lot of these markets are pricing it in. You look at the 10-year yield, and I think there could be one more low left in here, but I'm going to ask Peter if he thinks rates are about to be troughing. So here's your 10-year. Okay, that's a daily. But it looks like when we, okay, thank you, Gus. When you look at this, that perhaps we could have one more low. And that's going to be important because of US dollar yen, right? So the yen and yields are trying to put in a low here. Yen under a bit of an attack. We've had 2 drives. Actually, yeah, 1, 2 off this red line. Still pretty, still about 30 pips off it. In fact, if we go down here, I'm going to give it a shot, because one more low in yields and 61.8 in yen. And you know what? If you're hearing me and some of these things make sense to you and you'd like to have this kind of input all day long and in the evening as well, I recommend you take a trial. And this is a trial that, you don't have to pay an attorney. It's only $1. And you're going to come out of this trial, unlike most trials where the lawyers only win, victorious because of the team who have your interests at heart, who really want to see you succeed, do everything we can to put out great research, both fundamental and technical, have the support of a community in our members chat, and be able to see guys like this trade during the day. That guy. Not sure how often Greg stops in, but you want to see his wave counts before you click your mouse. We'll hear from Stelios today about what he thinks is going on, and Mario's comments. And Stelios really has a handle, one of the best fundy guys I know. Steve, if you're attending FACE webinars, you know, you could walk in with a blank slate. By the time you're through with this review, you have some things to think about. Dale Pinkert, the interrupter, Joe Perry, our media spokesperson, Paul Franco, man, he puts together that bias chart every day for people in the European crossover. You could also see Paul. He does a pre-Asian session, so you could do that there. Amanda is, people love her in the chat room, not only because she's cool, but you know why. She kicks butt in the market. Andre, a great tactician with harmonics. So let's see. So let's say you took an annual, subscription here. Okay, top tier, semi-annual. So the top is going to cost you $1,000. Okay, so if you're a trade standard lots, that's 100 pip move to pay for your year. And they happen quite often here in FACE, and more frequently as a subscriber with our patterns in play and just working with the guys in private member chat. Okay, so that's why you consider something like this, especially on a day like that. You'll get push alerts on, maybe someone could push an alert here, and you don't have to be stuck. Say, for example, I had to go somewhere in a half an hour. All right, I put on the app on either my tablet or my phone, and I know that if we get an important turn, I'm going to get a push alert where I don't even have to be watching the market, because I know that Blake and the guys are going to let me know if there's a breach of important support or resistance, and then I could take action, and I'm not locked in to my trading station here at the house. Okay. Will I subpoena us? No, I won't. Yes, to you, Ziggy, I will, and it'll be postage due. Okay, just like you mail things to me. All right, so let's have a great day. Let's see what kind of follow through. Looks like the dollar, you know, here's really the area I thought we could go to. I may just wait to react to the NFP. You know, if the NFP is really weak, and we just had this move in the dollar, maybe we break down. So we're going to learn by the end of the week what the dollar is made out of. And just for your own edification, for the dollar to reverse to the upside, I go back 2 weeks and look at the close, and that looks like it's going to be 97.60. So if we start closing back above this bottom here, by Friday, you have a 2-week reversal. So good hunting, everyone. Good luck. Stick around. I'm going to bring Blake on now. Blake, maybe the blog was released just in time.
Hey, well, good morning, Dale. How you doing?
Hey, bro.
So, you know, taking a step back and thinking about what the ECB just delivered is basically they said that they're going to keep rates flat till 2020. They're not lowering rates anymore. And so that came as a little bit of a surprise to the market. So the euro is, and this is the risk, and we talked about it yesterday, is the risk that market was expecting a pretty dovish ECB, and unfortunately they didn't get it. And so let me give you my screen here. So they didn't give us a dovish outlook and the moving forward. I mean, they're looking at rates staying the same. So the ECB is keeping rates at bay. The Bank of England's keeping rates the same. BOJ is. So what's the only central bank right now that is moving on rates? What do you think, Coach?
Well, I know there's talk about that we're going to ease. So,
The Fed's going to ease, right?
Yeah.
So if the Fed is the only central bank right now that is keeping rates or moving rates lower, where does that put the dollar?
At a yield disadvantage.
Yeah, and so the dollar, the natural course of movement for the dollar is going to be lower.
Teacher, can I go to the bathroom?
You can.
All right.
So I guess if you got to go pee, you got to pee. I can't stop Mother Nature. But what I'm saying is the euro, it's got only one direction now, especially if the Fed starts signaling that they are ready to cut rates. So the euro above 113 today, especially if Draghi, really, just holds the line. The euro should trade back up to the 200-day moving average, which is 113.70, and maybe even beyond that. I think that the risk now of a move lower in the dollar index is quite substantial, and this is the risk that we've been outlining for the last week. And so I think you've got to really be thinking where the euro is going to be soon. And this is obviously as long as stocks don't completely come under pressure. Now you look at the S&P, and Steve, by the way, who you'll hear just in a little bit, he's long the S&P. He picked it up down here, I think around the 200-day or maybe just below the 200-day. He'll clarify that. But the S&P looks like we're going to bounce back to the 200-day moving or the 50-day moving average around the 618, somewhere up here. And if that's the case, stocks look pretty well supported. That should help keep the dollar under a little bit of pressure. The dollar, the Fed's really, going to be keeping rates low, if not lower than where we're currently at. So, today I'm just looking for a close above 113. Euro closes above 113, and I'm going to be pretty bullish. And, I'll be looking for, 114, 113.80, maybe even higher than that. Excuse me. Let me turn down. You guys probably hear that. This is the ECB waiting music. Okay. So,
are you on call with ECB waiting for Draghi to answer?
What's that?
Are you on hold with the ECB waiting for Draghi to answer?
I am like, hello. Thank you for calling the ECB. We are not here to take your phone call right now. Please leave a message at the no. It's we pipe in directly to the ECB press conference over at my office in Greenwich. So when I'm the reason why we pipe in directly to them with audio, because that audio feed is going to be quicker than you're going to get on Bloomberg, because Bloomberg, it takes them so long to type the news headlines, and plus with the speed of like technology, we'll end up audio wise getting some of the cues a little quicker than the algorithm. So that's why we actually pipe in directly to the ECB conference call. Yeah, obviously we have to pay for that too, because it's different if you go to a video feed, and if you're watching like it on Bloomberg or on CNBC, like Europe, your feed could be a little bit a little slower than what we're seeing. Anyway, so again, I'm just going to reference the dollar index. So the dollar index is going to be pretty important, and you can see obviously the 97 level. The dollar index, we have the double top here, And the double top is, you guys have heard me mention it before, it points down to the 78% retracement, which takes us around to 65, I'm sorry, 95.68. So, but sorry guys, I'm, I was out till late last night. My son's soccer or slash football practice if you're in Europe. Anyway, or anywhere else in the world but the United States, they call it football. We just call it soccer. But anyway, so we're down, this is where things get really interesting, is, a break below this 96.65, big, nice long 1 year long trend line. So that's going to be pretty important for the dollar index should we get down there. So just keep an eye on the dollar at this point. The cable, cable is also getting a little bit of a lift, and this is, mostly due to the euro moving higher. The pound's going to be able to reciprocate a little bit, and as the Bank of England looks like they're on hold, but obviously the Bank of England can shift due to the scenario that's happening with Brexit. I still think a move above, you take these levels right here, roughly 127.70 ish. That's where things get a little bit more bullish for the pound. And I've been trying to play the pound on the long side in several different ways. Whether it's right now it's the pound yen, which I'm playing on the long side, but I've tried to play the pound on the long side a few different times over the last couple of weeks because of this Gartley pattern. But really, it's a move above 127.75 that turns things bullish. Speaking of, the pound yen is right up against some resistance coming out of this descending wedge. You can see it pushing right up against this. I think we need to get above 138 really to loosen things up completely. But the thing about the pound yen, and one of the reasons why the yen's really struggling here, is because the dollar yen is stuck due to options. Options is keeping it very well confined around the 108 yen level, and that's why we just haven't seen a big lift in any of these yen pairs, and which is surprising because equities have been bouncing, and they have not taken the yen pairs higher as a result to the dollar yen just being stuck due to all the beta that's around the 108 level. Now, one of the other things that I think I'd like to talk about before I turn it over to Steve and Stelios here is taking a look at the US dollar Swedish krona. This has been really on my radar for being a short if the euro responds positively, because the US dollar Swedish krona is just, it's been trading heavy despite the euro bullishness that we've seen, or the euro bearishness that we've seen as of late. We've seen a real divergence between what the euro has been doing and the US dollar Swedish krona. My thought process has been is the euro turns higher, the US dollar Swedish krona is really going to start to weaken, and we're really starting to see some downside pressure in the US dollar Swedish krona. So what I'd like to do really quick is let me get rid of this trend line here. Let me do this because this is the the flag pennant. Let's remove that and let's go to a 4-hour chart, and let me reset this chart. What is this doing down here? Let me get rid of that. Let's zoom in or out, excuse me. Do this, and you can see where the US dollar Swedish krona is really, takes a turn for the worse. So what I'll do here is I'll take this low, and I'm going to right click, and you get this with, if you have a advanced or more expensive trading view platform, not the basic platform, but I set the alarm that will actually send me a text and blah blah blah, because this is one that we don't cover on ForexAnalytix, but I wanted to share it with you guys anyway. Anyway, if we break through these lows in the US dollar Swedish krona, I think that's when, if the euro dollar is trading above 113, the US dollar Swedish krona is going to be trading below that trend line. That is really exposes us for a much bigger move in the US dollar Swedish krona, probably down to like this congestion area, somewhere down in this, I can go ahead and use this, but somewhere down here. And that's really, like I said, it's on my radar. I wanted to bring it to your attention because we don't typically cover the US dollar Swedish krona on ForexAnalytix, so it's something that I have to do here separately on this free webinar for all of you guys and gals. Now, I'm gonna take a step back for a moment. I want to talk to my colleagues Steve and Stelios. Good morning, guys. How are you?
Good morning.
Good morning, Blake.
Good morning. So, Stelios, you obviously pay attention to the macro backdrop of everything that we deal with, since you are the predominant author for all the macro analysis in the currency pairs that we cover, which is obviously gives everybody that uses ForexAnalytix a very watchful eye from a macro standpoint on what they should be expecting on central banks. How does today's, European central bank decision impact how you feel on a macro level regarding the euro dollar?
Yeah, good question. Well, today's statement actually only had two differences. So really, the main event is going to be the conference, but when Draghi comes out and answers questions, the Q&A session. But the two changes were, first of all, they said in the previous meeting that they're going to keep rates unchanged until the first half of 2009, until the end of 2019. Now they've moved that to the first half of 2020,
which is a big deal, right?
It is a big deal. I mean, it was expected, more or less. I don't think anybody expects the ECB to be hiking in the end of this year, given what's happening, across the world. And
right, but if people, how about people were expecting them to even be easier than they are right now?
Yes, I was going to get to that.
Okay,
so basically,
sorry.
No problem at all. No problem at all. So that was something that changed, but it was more or less expected. But the markets were actually, if you look at the ONIA swaps, they were pricing a slight chance of cutting, because you know how that is. Central bankers will say one thing, but really, if things get really bad, they're going to get aggressive. So the market was pricing a little chance of a cut. The way the statement has been made, I think that's out of the question right now. They're not going to be hiking, but they're not cutting. So that has been taken out. It was only a little bit of a cut priced in. That's been taken out. That's why the euro is bouncing a little bit. And the other change in the statement is that they're talking about details on the TLTRO3. So that was also kind of expected. So basically, overall, the ECB was not as dovish as the market in general was kind of expecting. So I think that's why we're seeing a little squeeze in the euro. Now, what do I think further down the road? I think the ECB is going to have a hard time hiking. But for now, given what the market was expecting, what we're getting, unless there's something big comes up in the Q&A, I think the euro is most likely to just edge a little bit higher from here. And you said before the euro dollar and the DXY is near the DXY is near support, the euro dollar is near resistance. So if that breaks, then I think the next leg is for the euro to go a little bit higher for the euro dollar.
Yeah, so in my opinion, would be a break above 112.80 would be a pretty bullish breakout for the euro dollar. Now, and thank you very much, Stelios. So Steve, with all that being said, how do you feel about the ECB meeting today and what happened, moments ago?
Sorry, I was muted.
That's okay.
It's obviously better.
Yeah, most likely, yes. It obviously didn't come as a surprise to me that they postponed it. I mean, I've been saying here that the US is going to be cutting rates since last year when Goldman Sachs was advocating like 4 rate hikes this year, which I always found like a joke. And I remember the last time the ECB pushed forward the timeline for hiking rates, I said that if they're not hiking now, they're never going to do it in this business cycle. So if you're asking me, there is absolutely no chance in my mind that they will be hiking rates after the first half of 2020. We will have to go through the next recession, go through the next recovery after the next recession, and then we can be talking about ECB becoming hawkish again. So there is no question about it. Now, from a technical standpoint, the way euro has been behaving makes it more than apparent that if Draghi doesn't really push the envelope, the path of least resistance is now higher.
All right, so so in essence, as long as Draghi plays ball here at this press conference, the euro should continue higher. Well, thank you very much for your outlook, and I'm gonna be passing it over to you here in 1 second. One of the things I want to also mention is regarding the peso. The peso raced higher yesterday at the close, and you can see it rallied due to Fitch and Moody's downgrading Mexico. But I warned our traders in the chat room, you got to be really careful with the euro. Oh, looks like the ECB meeting is starting here. He's going to be coming up here in a second, but it raced higher, ahead of the following that move by the ratings agencies. But you have to be a little careful trying to chase the peso up here, because U.S. and Mexico are meeting tomorrow. And then also, I was telling all the guys in the chat room last night, it's like, don't chase it up here, because a ratings move by Fitch and Moody's shouldn't have been too off kilter, because they're moving in preparation of the U.S. and Mexico, their entanglement in this trade war. So if things actually end up working out between the U.S. and Mexico, you'll see those ratings probably reverse course, and I would think that the market priced a lot of that in. So the peso has been backfilling, and my 2 cents are, as long as we stay below this 20 level exchange rate in the U.S. dollar Mexican peso, you got to be careful on the long side, especially with them meeting tomorrow. But anyway, I'm going to pass it over to you guys. Steve, if you want to take the screen. I hope you guys all have a very good trading session, and make sure you visit our sponsors, which is Forest Park FX. They're the ones that will help you find the brokerage firm that best suits your needs. And then also, with that being said, you can end up joining the reimbursement program and manage to get ForexAnalytix possibly for free based on your trading activities. So make sure you visit Forest Park FX, and you can get to them directly from our website, as Steve is showing you. And then there's a Skype and email link to contact them directly. So, all right, guys. Hey, have a good one today, and I'll catch you guys on the flip side tomorrow.
Or you could join Blake in the room. Good hunting today, Blake.
Thanks, guys.
Well,
okay.
Steve's.
Hey, Dale.
Hey,
So,
Hey, guys.
a couple of things I want to say. Blake talked about Mexico. Actually, Donald Trump said, was it late last night or this morning? I can't remember, but he said that not nearly enough progress is being made in their talks, because remember, we have new tariffs coming up on Monday, if I'm not mistaken. So talks are in progress, and Donald Trump seems to be not happy. So that's probably another reason why the peso is losing some ground. Another thing that happened overnight was some China statements. So they are clearly not going to, we said this before, they're clearly not going to just sit there and take whatever Trump is throwing at them. And they, they made a few statements like, the escalation of the trade tensions have caused some serious setbacks, and the measures on the side of the US on Huawei is astonishing, they said. So they're using some words as well, and let's see how this is going to go. But I don't think this. Go on.
Still, I don't know if you saw the news alert. Someone showed it to me that the U.S. also did a very large arms sale to
We just
Taiwan.
got, sorry to interrupt both of you, in US initial jobless claims at 218 versus 215 forecasted. So basically, as expected, so that should move the markets. We got like an impressive US labor costs minus 1.6 versus minus 0.8 expected. Productivity to 3.4 versus 3.5. Continued jobless claims more or less as expected. Canadian trade balance
better than expected, yeah.
Better than expected. I don't expect any of that to move the market. I wouldn't expect any of them to move the market as they came, even if we didn't have the ECB pressure, but especially, you know, ahead of the, especially ahead of that. I don't expect.
Okay. So Dale, you were saying arms sales from whom to whom?
U.S. to Taiwan.
To Taiwan, okay.
And, you know, there's already lots of noise, you know,
Yes,
China's,
yes.
right? So, I mean, that
That's
doesn't help.
sensitive, yeah.
It doesn't help if you're trying to put together a trade deal to sell a lot of arms to a country that China considers is a breakaway republic for a century. I don't know how long.
Yes, it's definitely a sensitive area, of course.
It's almost intentional.
Oh, almost. I don't think we need almost.
Okay. Okay. He really plays hardball, our president, doesn't he? Okay.
He does. What else? Okay, we also had the Eurozone GDP came in line at 0.4% year-on-year, quarter-on-quarter. And really, it's all about the press conference, which is starting now. So anything that comes along, I will interrupt. And
okay, Stelio, perfect. I really hope we're not headed lower in the dollar from here, because that's going to be bad luck for me. I was explicitly writing on the chat room yesterday that I was looking to be short a basket of currencies against long against the dollar, and you know, my entry would be if I saw the DXY hit anywhere between 97.45 and 97.55. That was my signal to go long several currencies against the dollar. Unfortunately, we stopped overnight, as you see, a little bit shy of 97.40, somewhere at 97.37 or whatever it was, which doesn't change my plan. The only thing that's going to change in this case is that I'm going to have to chase it.
Well, you never know, Steve. We could rally back and still get there.
Let's hope so.
I'm looking at the Dixie right now, and it's still a higher low until we take out yesterday's low. If they could turn it.
Oh, absolutely. It's very early. It's very early on the day. There's no question about it.
What if we get a C wave up there? Equality from here would take it to your level off the bounce from yesterday.
Can indeed easily happen, and that's what I'm wishing for.
Keep the faith.
Yeah, that's exactly what I'm wishing for. Stelio, by the way,
you wish upon a star.
I knew that
All right,
this
go
was
ahead.
coming. Stelio, by the way, interrupt at any given point because Draghi has now started speaking, so we should, at any given point, see some volatility in the euro. Depends on what he's obviously saying. So euro is toying around with this descending trend line once again. Even if you redraw it, even if you decide to redraw it to like this, we're still very.
Draghi's just lying. Anyway, guys, every central banker, I put up Johnny Lang's "Lie to Me" song. Lie to me, tell me everything's all right. Okay. That's
to be honest,
I
think that Draghi is better in that than many of his
peers.
Yeah.
What country will Carney get hired by next?
That's a good question.
I think he's going to go to the Greek central bank after the UK.
I prefer the guy we have actually in the Greek central bank, believe it or not.
Okay.
Yeah. He's a guy that knows what he's doing, but of course,
I'm hoping he goes to China to the PBOC.
Yeah, that would be interesting. So 113 remains the key level, super key level, as you see here in the Euro USD. USD Swiss toying around with this major trend line that you see here, this ascending wedges support. Yesterday we were trading below it intraday, but with the reversal we had late on the day in the dollar, we managed actually to close above it. So still not having penetrated through this one, as we haven't done the same in the Euro USD that I was showing. Now, the USD yen, on the other hand, is already trading below that equivalent trend line, but you have to respect here that the 61.8 is also very important. It also is the level of the previous low that we had. I'm ignoring the spike low because that was like a 1 minute, 2 minute trading action, and so I'm not taking into account. So 107.60 to 108 remains a very critical level with the USD yen. To be very honest, I would not be looking into selling the USD yen as a preferred choice to be short the dollar. I would rather have exposure in other currencies against the dollar and not the USD yen, because as you very well know, the USD yen can also moves very frequently along with what is happening with risk. And to be honest, I'm a little bit torn. I might be long the S&P. People in the chat room know it from 2742. So I'm almost bottom picked it actually. But I'm not very sure that we're going to continue moving higher. And the reason is because the whole thesis that Bernanke and the whole central bankers group had built during the previous crisis of 2008, 2009 has now been completely shot down and irreparably damaged. Okay, I remind you, and I've said that multiple times here on Face. When Bernanke was called by Congress to explain what quantitative easing was, his thesis was that, and if it is debt monetization, his thesis was that no, this is not debt monetization, because we intend to do it for a short period of time to handle very rare market conditions, and then we intend to reverse the policies. Now, even officially, Powell yesterday admitted that zero rates and, most importantly, quantitative easing are not anymore tools to be used in emergency conditions, that they should now be considered regular tools for any central bank. So first of all, I think that at some point the markets will start worrying about it, because now the whole facade that was something temporarily has died down. Second of all, I think that in essence we have an admission that the market, that the economy is headed towards a recession, and they're trying in advance to help it from going into one. And given where the valuations are at the moment, I think that quite a lot of stockholders should start worrying about it. So I'm not very sure if such a direct admission by the central banks, because by reversing monetary policy and going back to zero, and most probably very soon they're also going to reverse the trajectory of the balance sheet of the Fed, which hit a high of roughly 4.5 trillion. It's now a little bit lower than 4 trillion, but most likely the next move is higher. And when I'm talking about higher numbers, I'm talking about a lot higher numbers. I think that the markets might start really getting worried about it. Regardless, I had every reason to buy it because I saw a corrective move, reaching equality. So the risk reward was there. Let's see now how the markets are going to react to that. Stelio, nothing from Draghi so far.
He's been pretty neutral. He said that Q1 data was somewhat better than expected, but global headwinds continue to weigh. In general, he's made a few statements, but they're all relatively neutral. So it's not nothing new.
But I remind you, I said it before because I strongly believe it. A neutral Draghi is probably gonna
is more hawkish than expected. Yes.
Yeah, is probably going to lead to a bullish breakout for the Euro USD. If you can see my chart, because the last 3 days we had one occasion that each day Euro USD is currently once again toying around with a very, very major confluence of resistances here. And keep in mind that if we take into account this formation, if we want to judge it as a descending wedge, which, yeah, it is, even a full retracement of that wedge, as the theory suggests it happens when you see a breakout of a descending or an ascending wedge, could point to a move back at 118 for the euro. And yesterday we had an interesting conversation with Leon, a magnificent person. I also met him in New York. We had a lovely dinner. He really knows markets. He's still a strong believer that the US dollar is going higher. It might in the medium to long run. I mean, it might, but even a move to 118 can be a significant move, even if it proves to be correct, right? So I don't want to predict what's going to happen in the future, like 2-3 months ahead, having to do with where a currency is going to be. But I can easily see why we might spend a period of time with the dollar pulling back from here, and we talked about that yesterday as well with Paul, simply because, and this is to also answer the question from a friend here that is writing the following. Let me. Jason was asking Blake in essence that he said that he's looking for higher euro likely, and he says how euro at 0, USA at over 2%. He means rate differential still favors the dollar, and that is absolutely not right, because if by having a rate differential meant that your currency would appreciate or depreciate in perpetuity, then you understand that would make no sense. The market has currently fully priced in that rate differential. Because you have a rate differential doesn't mean that one currency is going to constantly be depreciating against the other one. It means that it's going to find an equilibrium based to that rate differential, and then whatever threatens to change that differential and whatever the market is pricing in, then should be moving equivalently the FX. Okay, so what we had was a rate differential that was actually, if we're talking about the rate differential, was actually 2.5%, and the market was pricing in until 6 months ago that differential would widen to 3% to 3.5%, and currently we have a rate differential that is threatened to move back, let's say, towards 1.5%. So what you expect to have in this case is for the exchange rate to move in that direction, which would be a stronger euro. Okay, so that is how it works.
Steve.
Yes, Delia?
Sorry to interrupt. I thought you were done with that. Just wanted to say there's Draghi actually said that he expects inflation is likely to decline in the coming months, and we have to remind ourselves it's at 1.3% year on year, the last reading, so it's quite a bit below the 2% target. And then he said, but expected to rise at the end of the year. I mean, I don't know how they come up with that, but
honestly,
how
the hell do they come up with that? I mean,
yeah,
I would really want to, know. I would really somebody to show me how exactly they calculate things like that. They're always wrong. So
yeah.
I don't even know why they keep doing it.
And the interesting thing is that they're revising the inflation forecast by 0.1% higher in 2019, 2020, and 2021. So 1.3, 1.4, and 1.6 respectively.
To be honest, Telio, in my opinion, from what I see that they're planning to be doing with monetary policy, they are very, very tepid about it. I mean, they're very conservative about it. I think that inflation, if you remember, I started talking about the dangers of stagflation a couple of years ago.
Yes, I remember.
Yeah. It's not by accident that I believe that at some point we're going to have an explosion in inflation. And this is due to two different reasons. One of them is because they're toying around with it too much. And they've become too comfortable that we're not going to have inflation again. It's not that far away that we had these serious issues with inflation. It was at the the 70s. And if we're talking about policies like the ones they want to follow, then we've seen much more recent examples in places around the world. The problem being here is we can see that they actually believe that they're going to get higher inflation simply because at some point all central banks had a target to have inflation up to X. X usually was around 2%. Then 2% became ideal. So from being a ceiling, it became ideal. Now, we've started since months ago, and I talked about it, the 2% has become a mean. They want to target symmetrically. I love this word. This word. I mean, it's so funny. They want to have a symmetrical target at 2%, which means, okay, we had less than 2% inflation for a period of time. Why don't we get, some more than 2% for a period of time? And, when you start toying around with this, then you're going to get it blowing up at your face at some point. Dale spoke about rate differentials yesterday. I didn't want to interrupt him at that point, and we had other things to talk about. But I also believe that we're going to see the spread between short-term bonds and long-term bonds, bond yields, widen a lot, because I think that the market at some point is going to start pricing in that all those monetary experiments are actually going to bring inflation. And as you know better than anybody, Stelio, the central banks, Fed included, of course, they can't
You
really...
just took my question away for Peter, but I'm going to ask him too, because, I didn't think that was going to be the reason, Steve. It was just a chart of the 30-year just looking like it has better structure than the 10. So could it also be not just inflation, but the Fed really only controls short-term rates?
That's what I want to say.
Yeah,
they control the
okay.
short-term rates, as you very well said, and especially when the market starts pricing in inflation due to all that,
Okay.
they will be almost totally unable to do something about the long end. Okay.
Yeah, because people want to get paid more, especially if the dollar is selling off, right? I mean, to hold 30-year paper, I won't be alive when the coupon.
First of all, it is extremely simple, but there are some people that don't even think about it. When a currency goes down, the equivalent bond price at some point has to follow suit. What is a bond? It's a promise to pay that currency in the future, right? It's as simple as that. I mean, it can't get simpler than that. So
can you please make it a little less complicated for me?
Yeah, so just think about it. If you have a dollar that is moving lower, okay, I say if because we're currently, at a juncture, at a critical juncture. That's why we decided to write that blog post, okay? So we're at a critical juncture. Let's say that now the dollar starts, breaking down and you have a devaluating currency, okay, because of, what the market is now expecting from the central bank to do, et cetera, et cetera. So let's assume that you have a devaluating currency. At the same time, you are clearly pointing out to, extreme monetary policy easing, which definitely has a chance, let's be conservative with that and let's just call it a chance of spiking inflation at some point in the medium to long term. So that's an extra reason why you would expect bonds to sell off. So as you said, the Fed can really control the short end of the bonds. They can monetize it all if they want. But they can't really control that much, the 30-year one, for example. So I wouldn't be surprised if I see the spread between them widen a lot more than this. At least that's my point of view. Let's see.
So that's going to be a surprise for everyone who's saying, the bonds are predicting the inversion or recession. But it hasn't brought one on yet, but maybe this is what brings it on. The financials will like it though, Steve. I think the banks will like it because that's going to make the spread more profitable for them. What do you think?
That is true, but if you remember, that is not true under all circumstances. If you remember when we had bonds moving lower across and yields moving higher, across the curve, I warned in advance that a lot of people expect this to be positive for the banks, but it's actually going to be negative because bank assets would go bankrupt. And actually the banks ended up selling off. So if we do see rates lower and, future, long curve and the curve steepening, then yes, the banks are going to be doing good because, the low rates at the short end are going to, keep people and businesses from going bankrupt, at least, temporarily. You know what I mean?
Got it. Thank you.
So
Bucky.
yes, if the spread widens while the short-term rates remain low, yes, the banks will do good. Sorry, I'm reading questions here. Euro pound is rising. Okay, what do we think about the euro pound? Let's see. Here it is. So no surprise that the euro pound is rising because we had a triangle. I expected the move higher from this triangle. We came back, we retested the broken triangle as support. As long as this is the case, you need to respect this move higher. Now, I think it should be running out of fuel quite soon. So we might, let's say, make it to retest the next confluence of resistances at the 78.6. I wouldn't be surprised if that happens. But I have to tell you that I think that, somewhere there we're going to completely run out of steam, and I would be expecting at least a deep pullback from there. So bottom line, if you're long, I wouldn't be, closing my position. I would still hold it. But, if you're looking to take a position at the moment, I would, wait for another push higher and, some kind of a reversal signal. And then I would be really interested to, to fade this steep move higher. Don't forget that the euro pound, we've had several whipsaws, but let me draw on here. We have nice annotate tools. Still remains, you can see it here, right? In a descending channel, you can see it. So basically, we're not yet in an uptrend. Okay, if we break above there, we will be. Until that happens, it is very, very likely that we're going to just keep spending more time oscillating within this descending channel. So, the closer we get to resistance, the more careful I would be about, taking some kind of a, position here to the long side. If now we end up breaking higher, yes, I can easily see an extension. But as I said before, we're not there yet. Okay. Drawings. There we go. Nice. So let me see. Questions. DAX and S&P, please. What do you see DAX will do after the ECB? Okay. So the DAX is also at a key junction. I think it's a good idea we have a look at those two on a 4-hour chart. So here it is. DAX, so far the move lower is very orderly, and you can see this because it remains, within a channel. So as long as that's the case, I wouldn't rule out, the bullish resumption, right? We had quite a strong move higher, also within a channel, and now we had a pullback, which might be already over. I mean, this might have been an ABC, and this being complete. When would I be comfortable that we're resuming higher? If we see a breakout from this channel and this 61.8% fib at 12,130, in which case I would expect higher prices. Until that happens, keep respecting this orderly pullback. So that's what I think about the DAX. Now, having to do with the S&P, S&P also pulled back so far in 3 waves, quite an impulsive move higher. I wouldn't be surprised to see some type of a pullback here, but I also wouldn't be surprised to see continuation higher. So I have to say that, S&P looks rather constructive. The move lower doesn't have any impulsive characteristics. So I would be cautiously bullish, and I do have a position, as I said before, against the lows. That's what I think. Now, don't try to find any macroeconomic logic in that. There is absolutely none. Valuations are stupid, but whatever. Now, gold and silver, that's a good question. What is happening here with gold and silver? Things are very simple. Gold has broken out. There's no question about it, and it remains extremely well bid. Next area of resistance is that 1346. It's a previous high. And then we have the key, super critical resistance area between 1350 and 1360. You can see why if I zoom out. This is a huge, huge triangle that we have here. If we do break out from there, I expect a lot more upside from gold. And when I say a lot, I mean a lot. I think that we're going to be hitting 1400 in literally zero time. And with what we're seeing from monetary policy, it's really no surprise that this is happening. Silver has also given us already a bullish sign. It first, built a base roughly at 1430, 1420. It then moved above this descending wedge. Then it broke above the 1480 level, which I said is quite critical to confirm. And I do think that this is a bullish development, and I would be looking to buy pullbacks. Unquestionably, I would be looking to buy pullbacks, and especially I might even end up favoring silver over gold if we see some type of a big reversal from the gold-silver ratio. As you see, the gold-silver ratio has approached this huge ascending wedges of resistance once again. So that might be today we're seeing an outside black candle, which is a nice reversal warning. So let's see if that's going to end up being something more than that, because if that's the case, I think that this might point to a period, at least a period of a pullback, which at the same time will be pointing to a period that silver is going to be overperforming gold. Okay. Copper is also trying to, stabilize here. Although ideally, and it can still happen, I would want to see a move to the previous support area at 257. That would be the ideal level for me to look for long positions. But there is nothing stopping it from stabilizing somewhere higher. Ideally, I would want to see that support level getting hit. It has already sold off, quite a lot, which is a move I expected. Now, would I be buying it already? No, probably I won't. Now, if it hits support and I see some kind of a reversal candle, then I would be more than happy to buy it. Until that happens, I would rather be, putting my money on risk on through other instruments, like for example the S&P that I showed. Now, the Kiwi, on the other hand, is also showing, a very good reaction, despite having yesterday's candle ending up being, quite a cautious one. I mean, it was a pin bar with a very, very long upper wick. We are once again recovering today, and I see no reason why we shouldn't hit the next objective, which is at 67.10, 67 to 67.10, the 200 DMA, previous support resistance area. So Kiwi is one of the instruments I would be looking to put my money on in taking short dollar positions. So as I wrote yesterday afternoon in the chat room, this would be one of my choices. The USD Swiss and the Euro USD would be two more. Now, having to do with the cable, I would be more cautious because so far I don't see the cable overperforming against others. But if we see some type of a big reversal a little bit higher, from the euro pound, then I might consider, an opportunity to buy some cable as well. Of course, and I want to reiterate this so I'm not being misunderstood, all that based on the assumption that the dollar is going to confirm the fact that it's breaking down. Yesterday, we had that reversal candle, which so far today is not showing any follow through. I was never convinced by that reversal candle. I'm the first person that pays, very close attention to candlesticks, especially, if they're on a daily. But, I didn't write anywhere yesterday. I didn't advocate anywhere yesterday that the reversal candles we saw yesterday should be believed, simply because my gut feeling tells me that the dollar is probably going to break down. So, I'm not taking into account yesterday's candlesticks, not unless today we see another reversal higher, because so far the dollar is lower, and we end up closing higher once again, in which case I might start, believing that, the dollar is not ready to break down yet. But unless that happens, I'm much, much closer in gaining exposure to being short the dollar than anything else. I'm very, very close to triggering that. As I said, if, for example, the dollar had happened to rebound a little bit higher overnight, I would already be long several currencies against it. Coach?
Yes.
We're at the top of the hour, right? Because I hear.
Yeah. The big hand is on the 12, and the little hand's on the 6 for me in San Diego.
For me,
In San
for
Diego.
me, it's at 1600.
Hold on. I think I just heard the rooster crow. My life is like a farmer, up before sunrise, asleep after sundown, except that I nurture seeds of greed for the harvest of commissions.
I've told you multiple times, you should have become a poet or a writer or something.
I am. I'm Face's official poet.
And singer.
Oh
not
yeah, well, yeah.
Singer. Yeah, right.
Yeah, I lost my voice. Anyway, thanks, Steve. Good rundown. Hope you get a rally to sell. I did notice, though, that with all the dollar pressure, the yen keeps trying to hold in here. Anyway,
It is. And it is, as I said, it's on a critical area at the moment.
Yeah.
This 107.60, 108 is a critical area. But if we do break down from that,
look out.
I would be very, very, very careful.
That means yields will even go lower than they were earlier in the week.
Which isn't a big surprise, right? I mean, bonds, are still holding up very nicely. I mean, they're extremely strong.
Well, you know what? I think that fundamentally, at least I'll speak for myself, I'm an amateur when it comes to understanding the fundamentals behind my price charts, and I think we're very fortunate to have Peter with us today. So,
by the way, have a look at today's candle in the Bund so far.
Yeah.
If you remember, I was warning specifically not to try to fade this move. Just look at the move today.
Yeah.
We are comfortably at all-time highs once again and pushing higher with momentum. So, don't try to fight this until we get some real evidence that it's pulling back. And why would it pull back?
Look at that RSI. I mean,
it's literally taking off, right, to space.
Yeah.
I mean, it's vertical. Yeah.
Elon, one of Elon's rockets. All
Most
right.
likely, yeah.
Okay, buddy. So, Peter, welcome back to Face. I just promoted you as a panelist. I'm showing your website. How are you, my trading warrior brother? There'll be a drop-down menu.
I unmuted him. Try again.
Hi, Peter.
There should be at the bottom of your screen.
I see it. Yeah.
There is a mute button next to it. There is a little arrow. If you click on it, you can select the microphone. And
you're talking to Peter.
Yeah, and the sound source. So make sure you've selected the microphone you want to use, so we can hear you, because we can't hear you yet.
I wonder if no, he's not calling in.
No, he's not. He's logged in through his computer.
New platform partner. We're making it bloom in Zoom. So he's having some issues. He dialed in, he said. That's the problem. Yeah.
Oh,
I just saw it on Twitter. But yesterday when someone dialed in, it was...
in order for him, perhaps he has done both. Perhaps he's logged in through a computer, because we can see him here as Peter Bookvar, and dialed in at the same time.
Yeah.
So, if that's the case, then he should use the computer sound. because we cannot unmute
Right.
him through phone. Not on this platform. Yeah, he's probably right because I see total one phone call in listen.
Yeah, I noticed that.
Yeah.
So I just tweeted him a DM. Peter, you should be able to hear me anyway. So it doesn't work when you call in. I should have let you know. I mean, I use a headset. Otherwise, you have to use the mic in your monitor. He can't. He doesn't have a microphone.
Is he on a laptop? Because if he is, every
If you're on a laptop, it has a microphone. He doesn't have one. Okay, Peter, I apologize.
Ask him to try something. There is a little chance it's going to work. Ask him to, through phone, to press *6, and if that doesn't work, #6 to see if there is a little chance that's going to work. It
Did
works
you hear
for
that?
meeting. *6, and if that doesn't work, #6.
He could hear us. We just can't hear him.
Yeah, that works in meetings, but I don't.
And I'm communicating with him on Twitter. What a shame, and what a great day to talk to him.
Indeed.
Okay, so I'm going to have to include that from now on. Some people are used to calling in from the GoToMeeting. Some of my guests are going to have to invest in a microphone. #6 didn't work, and now he's going to try *6. I doubt it.
Yeah, let's see.
Yeah. While we're waiting for Peter, I was looking at the peso after that news. Okay, Peter, I apologize. I'm going to get you in on the next possible opportunity if you can have a mic. It's our new platform. Appreciate you trying. Okay, buddy? All right, so no interview today. I'm going to wrap it. Pretty volatile session. Good hunting. Go into the members chat and see what Blake is doing here.
Yeah, we're going to be covering, the market.
Yeah.
Reaction, post reaction.
Yeah, react to the reaction. And tomorrow, guys, NFP will be here live for it. Trade the NFP with us. Okay. It's really going to be a fascinating day based upon, especially if Euro breaks out and we get the kind of number we get. Maybe we really get follow through if it's a weak number. I think we're due for one. So go ahead, Steve.
So far, Euro USD is still holding resistance. Same with USD.
Oh, so, at that wedge line right up there.
Yeah. So
okay.
Let's see what we get by the end of the day, because it might prove to be a very interesting day ahead.
Yeah, yes. Didn't Shakespeare say, "May you live in interesting times"? And it was kind of a curse.
I don't think he meant exactly that.
Yeah. Well, you know what? He wrote it for these times because you know what, Steve, you used to watch Twilight Zone, didn't you? Or maybe, well, you're so much younger than me. Do you ever watch a Twilight Zone before?
No.
Okay, Rod Serling wrote it. It's amazing stuff, from the 60s and so he couldn't write a script like we're living. So everyone, good hunting. Remember, don't just count your pips, count your blessings. And we'll see you tomorrow for NFP. Adios, everyone. I'll see you. Steve, are you going to end the meeting?
You do it, Coach.
Okay, where is it? More?
More?
No. Where's the end the meeting thing?
Leave meeting, whatever.
I don't see it.
Don't worry about it.
Where is it? View options. Let me find it so I know how to do this. Exit full screen, stop participant sharing, start video, question answer. It's not, oh, I see it. Lower right-hand corner. Thank you for the learning curve. See you, everyone.
Bye-bye.
Adios.